The Australian elections really rattled the market on Sunday. You saw big gaps on your Aussie dollars and your New Zealand dollars. And once again, for the second week straight, U.S.-China trade war negotiations tend to take the front seat, selling fear out into the marketplace. Welcome to the MTI Minute. Sounds spooky out there, huh? This is Kevin Dixon, Senior Trading Analyst at Market Traders Institute. You must trade without fear. Otherwise, you fear to trade. We have not a lot on our economic calendar to start the first few days of the week. So because of that, the markets tend to take and chew on the latest chatter. But why does that matter? You know what I would say? Just let those charts do the talking. As we head into the spiders, the truth shall set you free. The truth is the price of the spiders. The spiders, diamonds, Qs. We'll get to all these good things in the news here today. And as you can see, once again, under the knife. We started last week the exact same way, but at a deeper pace. So what's important is that we didn't sell deeper. What is also notable is that we're below the 50-period EMA. Once again, your 50-period exponential moving average sitting at $285.18. Now, like I was telling everyone on opening bell this morning, this is something you do not worry about. This is something you contend with. We have a doji on the day. It's looking like it's actually lending up a little bit more. But once again, Dow Jones overcoming triple digits to be flat. The session really, it's down probably about 80 points at this time. It's definitely going to be down the day. But we're beneath the 50, but yet above the 200-period EMA. This is a no buy, no sell zone. But where you're smelling the greatest concentration of selling is in technology. As I was alluding to a little bit before, the easiest thing to do if you want to get people to sell stocks, so you can buy them back at a different price, start talking about U.S.-China trade negotiations or lack thereof. Really, it's the lack of progress through these remarks that have led anything but fear into the marketplace. So take this into consideration. First quarter, that was a rally based on hope. Hope. I hope the world is full of magnificent unicorns. Well, you know, then the second quarter's rolling around. That's right, we're in the thick of things. And I think the markets want some answers. We're getting toward the middle to end of May. Next thing it'll be June. We were hoping to have a deal done by then. Now, while we know that negotiations are going tense because it's just like a game of chess, we're wanting to see progress. And today, it affected the stock market in technologies. We head back into the Qs because semiconductors getting clobbered. Two of the big names out there, Xilinx and, of course, Micron, NVIDIA, all on the sell because they're chip makers. And with the Huawei thing or whatever it is going on with the company that we just banned in China, Google got into the fray. We got a big gap down over 1.5%, but we've had those losses off. Beneath the 50-period EMA is the NASDAQ 100. Russell 2000, more alarming, is also waving the white flag. This is below both the 50 and the 200-period exponential moving average. So if anything, we're looking to sell anything on this index, though we did get a win on Planet Fitness. Now, as I was saying a little bit before, here's the VIX. The VIX measures volatility. At this point, you got a gap up, it's trading down, which is a sign that the sellers may have exhausted themselves. So as I explained, though this is the way we start the week, this is not the way we end the week. We just have to start from behind once again. Here's Planet Fitness. Now, of course, didn't get to talk to you last week because we were celebrating our momentous 25th anniversary event. I hope you had a lot of fun attending that event. But in the meantime, the markets were still open. Back on the charts on Planet Fitness, and we hit our target just within a few days. So there's target one. And you see why you get out when you hit your targets. You ever had a good trade? You're winning, you hit your target, which it was there, and you say, I think I'm going to get a little bit more out of this. And then it just doesn't go your way. Yep, that's a thing. That's a thing that happens too often if you don't follow your plan. Now, I'm going to give you a little bit of a little segment I put together for you here. We'll just call that In the News. So let's get to the In the News, back into my charts and into the news. I saved up a little special basket for you, so let me get to it first of all. That would help. And I keep moving it. Don't you hate it when that happens? And it'll be right over here. I can't get this time back in my life. I can't replace this time back in your life. It was in front of me all along. So we click on the In the News tab, and that's not going to get me an Emmy Award, if anything, for sure. This is Google, down from the 1170 level, 1165 levels that we were closing out on Friday, gapping down. Google and the Xilinx, which is right here, both started cutting deals and not making deals out of China just to avoid tariffs here. And this is definitely driving Xilinx down, 105. Our semiconductor complex is the one getting the biggest clobber. Now, I go into that all day long, but we don't have all day long. Here's Ford. Ford's announced a 10% layoff on their workforce. So over the course of the next few months, they're going to be unwinding down as automation is starting to find its way into the workplace even further. You know that's why Ford is building down and minimizing their workforce. Now, here is Disney. I don't know about you, but I was glued on my TV last night watching that final episode of Game of Thrones. After 7 years, I want to see my favorite characters win. Now, my favorite characters win along the way. You know, your favorite personalities that you're following throughout the series. And let's face it, you can't really get too attached to people there. Now, who's making money off of all of our 7 years of addiction to this thing that ended tomorrow? What are we going to do next week? What are we going to do? The Iron Throne, I'm not going to give away any spoilers here, but let's not spoil your view by going right back into the charts on Walt Disney Corp. Walt Disney Corp owns HBO. They own Marvel. They own all those things that are wondrous. So a lot of people talking about, yeah, we hate the Game of Thrones. A lot of people, we like the Game of Thrones. I enjoyed the series. I'm going to take it for what it is. It's fiction, folks. You know, you want to rewrite the book. You want to hire 1,500 actors. You want to film over 8 months. You want to write the story and do it all yourself. Go do it yourself and then give them a better idea. But otherwise, put a sock in it. It was a good season. Now here's the Aussie dollar, and I mean that with all affection, of course. The only thing that matters here is that the election gave us a big pop across the Aussies. There's your big pop. You have your Aussie dollar closing at 68.65. It opens at 69.12. 50-60 pip gap, a little bit of follow through above 69 cents, retreats back down to the 69 cent level now. So that news has subsided. We felt that shockwave throughout most of the currencies that were trading against the Aussie on the day. So as we go into the basket, we'll get to our Aussie basket there and just show you that Aussie dollars and New Zealand dollar moved in sympathy, everything gapped. But for the last few weeks, this thing's been on a map to sell. This is the pound Aussie. Now, the pounds were a cleaner short sell. Look how we've got a neutral candlestick on the day, but this gapped down over 100 pips, really. The Euro Aussie also gapped down a very healthy 80 some odd pipilulus and trying to recover that out, even as the Euro's been rallying against the Australian dollar. But my best basket today was the pounds. Pounds, pounds, pounds. Short it, the two words that make the best sense in the market. Pound dollar Swiss franc, shorted. We've been seeing a lot of bearishness here. This has moved over 400 or 500 pips within the last week. Short it. Pound dollar. Sure, we're getting some support. We've been breaking some support. Not too much going on the day. We cracked below $1.27. You take that next leg down. The guppy. The yen was trading somewhat strong, but we're inside Friday's candlestick, an inside day and outside day. When the trading range is trading inside the prior candlestick, it's actually called an inside day, meaning that we've decreased the volatility. You know, look to the left. Can the pound yen drop more? What has to happen there? Well, really, we got to have more yen strength going on to push the pound dollar down because the pound is doing it on its own. Just like no progress made in U.S.-China trade talks, no progress made in Brexit, we still got some support levels to break. So early in the week, that's the story that we're starting through as we're going into Tuesday's trading. I could anticipate that we may see a short covering rally, even a little bit more buying heading into the week. So don't worry about this thing beyond our control. U.S.-China trade noise. It's going to be that. It's going to influence the price. If you don't like what you see, stay in cash. Cash is a position. As always, I appreciate those likes and shares. In it to win it here on the MTI Minute. This is Kevin Dixon. Thanks for tuning in. We will see you next time.